Hi everyone, so welcome to Investing for Value. So we just had a really interesting week, didn't we? Just like markets just having a massive correction, but it's nothing new by any chance, like we can look at this graph here. And in 2008, right there, markets kind of dropped a huge amount as well. And then as you can see how the graph progressed, it continued to just go upwards and everyone was none the wiser. So it was like kind of a lesson just to keep your money invested. Though you can also see other things, right? So what do I see coming up on? Well, firstly, in 2018, we didn't have this big interruption like that the coronavirus is having. So I kind of see a different pattern. Like markets are going to drop, but I think they're also going to just drop in a big way if things are going to be continued to be interrupted. So how do I see things going? All right. So let's just be clear. Markets had a correction, but you probably gotta admit stocks were pretty overvalued. Everyone was finding it hard to get a really good bargain, unless you kind of paid a premium for your stocks. So like you couldn't say you didn't pay a premium buying Apple, buying Amazon, buying Microsoft. Those stocks all sold at a huge premium. Everyone's kind of being hopeful. Everyone's kind of chucking money into the area. And then the stocks were just going high, and having a really good time. Everyone was kind of, in a sense, starting to be a little bit greedy. So when the market started to show a little bit of cracks, everyone was in a bit of denial. Everyone just didn't want to sell, and then when markets began to drop even worse, everyone started to sell in a much quicker pace. Then it kind of went so that we basically had one of basically history's quickest 10% corrections, because everyone just held on because markets have been doing so well for so long, one of the longest bull market we've ever had, and everyone was doing so well that they didn't want to sell down. And if you don't want to sell down, you're going to hold, everyone's going to hold, and then when everyone panics, everyone runs for the exit door. And as you can see here, things have dropped quite dramatically, though it's a correction. You have to remember it's a correction on premium prices. So what's going forward? So I think things going forward, we're going to see the Fed lower rates, and you're going to see a lot of reserve banks around the world starting to lower rates. But at the end of the day, lowering rates doesn't cure coronavirus. It just helps companies lower their expenses, allow them to borrow more money. And how does that play out? Well, as you can see, like with this headline, Wall Street is wondering if the Fed can heal a coronavirus-stricken stock market that just saw 4.3 trillion in value vanish over 7 sessions. So over 7 trading days, market lost $4.3 trillion. That's an incredible amount. So when you consider that, yeah, you're gonna see the Fed come in. They're gonna come in. They're gonna think of an idea to get the markets back up again. And then once markets are feeling a bit safer, particularly now that like Joe Biden's just won South Carolina, that kind of just puts the markets at a bit more ease because if you everyone was thinking Bernie was going to win, and then if he continues his momentum, everyone kind of thought he had a really good chance of being president. Now, Bernie being president, or even Warren, you have a lot of industries that are going to be disrupted or regulated. So that kind of makes the market a little bit more fearful, along with the disruption of the coronavirus. But then you're looking at Biden having a coming back very strongly on South Carolina, and not far behind Bernie in terms of delegates. So now the market's probably considering, okay, now Biden also has a very strong chance, along with Bernie, and Bloomberg has, he's barely, started yet. But when Super Tuesday comes, in a few days' time, we're going to get a very clear picture of who's going to be the front runners in this true race because we're going to have four places, and everything's still wide open except we've just got a few, four areas that have just voted, and it's not going to be the best indicator, but markets take a little bit of information and they interpret it in such a big way. So what's going to happen? From my point of view, anyway, like this is just one scenario that it could happen. Considering the election, considering like Biden's just won, it kind of makes people at ease in terms of who might be president. And also, I can see the Fed lowering their rates, so then it's kind of acting like a stimulus to the market because the market kind of gets a bit more. It's like as you lower rates, the amount of return that markets need in terms of opportunity cost, the capital costs, it's not as high, which kind of helps prop stocks up by a little bit. So here I'm putting like on this bottom here, it could drop a little bit more, but I'm seeing like when once Fed lowers rates, I can see it coming upwards. Then afterwards, I'm going to expect after like a month or a month and a half, you're going to have a lot of companies come out with downgrades, particularly after the reporting in say like March or April. For that quarter, they're going to say coronavirus isn't getting better yet because we can see the trend right now. You look at South Korea, you look at Iran, you look at Italy, and those three countries are exploding in terms of the cases that are coming on. So things are not getting better anytime soon. With Iran, they're basically infecting the whole of the Middle East by, like not managing it too well initially, and then basically people just spreading it all about. Um, and also Italy, a lot of countries have actually caught it from people just being in, like, coming back from Italy. And I think Europe's going to be in trouble because as Italy just builds up so many cases and people spreading all over the place, you're going to get Europe being filled with that. So you think about the Middle East, you think about Europe, and you look at Asia, that's already booming in terms of that virus. So I don't think things are going to slow down. So I think in a month or a month and a half, you're going to see a lot of company downgrades because originally a lot of companies just saw it as, hey, we're going to look at 2 months, then we're going to see how things pan out. But after that, as it gets closer to 2 months, and I don't see things slowing down, you're going to see a lot more downgrades. So market's going to have another massive, massive drop, kind of like the one we've just seen in the past week. Then basically, but at that stage, you still have a lot of people holding cash because, like right now, you'll see the advice from a lot of people is hold some cash. No matter what you do, hold some cash. Even though like prices have come down and there's a bit of bargain buying, it still hold some cash. That's the advice. So basically, when we have those downgrades, we're going to be here. Then a lot of people are going to be like, stocks are at such a low that we've never seen for a long, long time. Probably about a year and a half since we've seen these levels. Um, so people are going to be like bargain buying, and there's all this justification of, oh, it will come back next year, it will come back next year, and so many people tend to be like long-term holders until they're not, until they panic. So I'm going to say, that a lot of people are going to be buying when it comes down to extreme levels. And that's bargain buying because there's going to be so much cash on the sidelines. It's going to prop the market up a bit more. So we're going to end up right here. And then if you've ever heard the trading term of a bull trap, then you're going to know what I mean. So what is a bull trap? So a bull trap is when a market kind of rallies, and then but it's actually quite a false rally because it's just a temporary rise, and then people are brought in at the higher prices. They're kind of trapped, and when the prices come down, they can't get out. So it's like markets rise, everyone gets excited, and then everyone just buys in. So I'm going to say, a lot of people buy in, and they're going to use a lot of the cash because at this level, a lot of people have not seen these price levels in a long, long time. So they're going to be buying, and they're going to be like, we're going to hold for the long run. We're not going to care about what the market does rest of this. We're going to take some Buffett advice. And then everyone's going to spend a lot of their cash buying, propping up the markets. And then as soon as we find out the virus is not getting any better, and then a lot of people just like go, oh, well, actually, the virus isn't getting better. And then we see some sell down. Then everyone tries to outsmart each other. Everyone kind of thinks, oh, if I sell now, I'm going to be a bit more clever and then I'm going to buy at a cheaper price later on. So then everyone's going to be selling down. Then even the long-term holders will be like, I don't want to lose my shirt. I don't want to be like holding on to this, and I could always just buy it at a cheaper price. So when you have this mentality, when everyone's kind of like selling, it's just like this big momentous ball of selling. Um, and then basically that's going to lead to one of the biggest crashes you've probably seen in your life. So like I don't know how big this crash is going to be, but it's going to be a massive crash because this is the most dangerous part ever when people all like come in into all the stocks, and have used up all their cash, and then the problem is when everyone's used up all their cash, they can't buy again. And if you're all in it, if all your money is in stocks, and you're seeing a correction that could be like 20 to 30%, well, you're going to panic because particularly if you have a lot of money in there, particularly if you're an institution, which institution investing is very large these days. Like a lot of active investing isn't actually that quite active now. So a lot of money is in the stock market, a lot of money is held by institutions, and also you're going to have a lot of retail investors who, in honesty, they don't have enough knowledge. They invest just on gut. They invest because someone told them to. They invest because they have an advisor. They invest, yeah, for ideally to earn some money. But when things are dropping, people are, panicking. You could well have one of the largest like drops that you've ever seen, which would be, a recession-like thing. Because if you look at how things are building out right now, we're going to have a recessionary type situation, even though people go like, oh, the virus isn't as dangerous as we thought it would be, but it's very contagious and it's spreading everywhere. And the most dangerous part about this virus, it's putting the brakes on growth. It's putting the brakes on all world economies. It's putting brakes on all companies' ability to grow or even operate. So when you think about all this activity, basically you've got so many companies that are halting their business. Like firstly, you're going to see all these, like you've seen the airline companies drop. You're going to see their profits just go down, down, down. They're not going to be able to afford to hire so many staff. Then you also look at all the other like tourism stocks, and then you see all the other yeah, like all the other areas. And then over time, particularly if you get this virus around quite a majority of the world, then you're going to have retail kind of shrink. You're going to have online possibly grow, but you're going to have most of the retail where they hire most of the people. Because you've got to remember, online doesn't really hire that many people, but retail, they hire a lot of people. And when you affect those type of jobs, those are the type of people that need the income, and they're the ones that drive, like spending sometimes because those people need to spend. They spend all they earn, and they help stimulate the economy. But the minute you pull back spending, you're pulling back revenues of other companies. The minute you pull back revenues, you're basically putting this company in a bad situation. They're going to have to cut expenses, and when they cut expenses, um, they're not spending as much elsewhere. Those people who got fired can't will have no income. Then they rely on the state. State has more expenses, and it's kind of like this really vicious downward spiral for economies. So I kind of see that kind of looking like that's going to be the case. We're going to see how things pan out, though right now, like things don't look very pleasant. That's all I can say. Like I'd say like if in 1 month or month and a half, you see a lot of companies downgrading because currently you're seeing a lot of the downgrades, particularly airlines, cruises, all the areas that you think would have this downgrade. Even the places that are selling goods because they can't build the goods or they can't get them manufactured in say like China. If you can't get the goods, you can't sell them. If you don't have the goods, what are you going to sell? What are you going to earn? You just can't earn anything. So it's that itself is a killer too, because if you don't have the product, you can't sell. Um, so when you think about all the companies that are either engaged in manufacturing or need products from manufacturing, that's all part of it. So when you think about these things, like company downgrades is gonna be quite normal going forward. Like I want you to consider that if this was the case to happen, like if you see all these companies downgrading, hold more cash. Do not try to pick really good bargains yet entirely. Like I mean, if you see some bargain, like there's still some stocks that are worth buying. Like, no matter how bad things get, there are still some stocks worth buying. But you got to evaluate these stocks and you got to go, what are the fundamentals that keep this company strong in the adversity of this virus? And also, if price was to drop, what would you keep doing? Would you keep buying? You don't invest in a company where if the price drops, you don't buy more. So you got to make sure you're investing in companies where if the price drops, you actually want to buy more. Not like hypothetically, but actually, if it was actually coming down, part of you is really happy that the price is down so you could buy more. The other part is kind of dreading that it's dropped, but that's always going to be normal when prices drop. So I want you to consider that if this was a real possible scenario, which is very possible, then you'd actually hold some cash on the sideline. So here, when companies make downgrades, and we see another drop like last week, and then basically you're going to see this move up again on bargain buying, and possibly the Fed coming in to help. But then it just basically sets it up for a bull trap. You're going to have these companies that are really highly leveraged. You're going to have all these individuals placing all their money into the market. And then when markets drop, everyone's going to panic. And then we're going to see one of the largest drops we've ever seen. And that's how basically all the past recessions kind like in terms of like recessionary drops for the stock market, that's how it's happened. But like since it's also like the quickest, like correction we've ever seen, I think it's also going to be the quickest recovery we've ever seen. So like I think this market's going to drop quite substantially, but this will be in a period of like months. And then close to the end of the year, we're going to see a little bit of a upbeat in the market because once people realize, oh, the virus is under control, people are starting to hire again. We can stimulate the market again, but I wouldn't say it like but I wouldn't say like it immediately all happens. The recovery is going to be slower than the drop. The drop's going to be quite quick, and the recovery is just going to be like slowly coming up. But like don't use this chart and say, oh, it's going to drop to these points and these points and these points. This is just me just roughly drawing and making just rough predictions, but that's kind of my view anyway. Um, that's only one scenario of how things can pan out. It could just be like virus gets better, like virus gets under control, markets continue to move to the highest highs. But I don't think it's going to be the case because we've been running on such a long bull market. We're due for a correction, and we're also due for a big recessionary drop. And I kind of see this being the catalyst. Like, this is the actual event where it's going to drop. And if you've ever read a book by like Nassim Taleb, this is the black swan type of events that's basically going to cause a big market drop. So like you can see what my logic is in seeing why this might drop. But of course, you can evaluate it, but in terms of your opinion and say, you might not see the market dropping by that much, or you might not see the market dropping at all, or you might see it dropping worse than this. Though if the market dropped to like 2,000 points, I think it's going to be quite bad, given we're around about 3,000 currently. So like usually market drops usually about a third, about 30%. And then a 30% drop is massive when you consider like that some companies will drop more, some companies will drop less. But you only have to own some of the companies that drop a massive amount, and that's really destructive. In terms of your portfolio, no one wants to be holding like even the past week, a lot of people have had their portfolios massively destroyed because you've been holding stocks that had a massive drop. So my advice is like, well, in terms of what I would be doing anyway, like, do what you think is going to do well for you, or what you think the market's going to do. But in terms of what I would be doing, is I'd be waiting for the Fed to come out. I'd be waiting for the Fed to help prop the market up. I'd be waiting for a little bit of a enthusiasm kind of relief rally, and then once things come up back up for a little bit, for a bit of fresh air, I want you to like start thinking about holding some cash. Like that's probably the most prudent move you can do right now is sell some, hold some cash. If you're not holding cash in this type of market, you're going to be hugely disadvantaged. Like literally in this type of market, you have no incentive to be that fully invested. Even if you're long term, you don't have that incentive to be that fully invested, especially when companies are all pulling back. They're getting less business, and it seems logical that the companies will not perform as well as we all think they will. So you just have to use a bit of logic in your mind and go, what's logical? What's happening locally in terms of businesses around me? Are businesses losing businesses? Like, are they losing business? Is the revenue pulling back? If you know businesses are pulling back because of the virus, well, you basically can see what's happening to the rest of the nation, and you're also seeing what's happening to other nations, right? So, like you use that type of thinking to see how things are going, and you can also see how bad they're going to get, which even, they're getting bad. They're not like really bad yet, like, but things as they go on, because most people are kind of being very hopeful that markets are going to just come back out of this okay, but you can't be hopeful in these markets. You can't just be holding for hope. Hope is not a strategy, okay? But holding some cash was. So, I want you to consider that scenario, and think about what you would do if this was the type of scenario, because it could well, come true. Until then, it'll be interesting watching the markets as they go forward. And I wish everyone good luck investing. And I hope you'll, take some caution and hold a bit of cash.